First Republic Bank is failing, guys.
A lot of news this week. Breaking news this morning.
First Republic.
First Republic Bank. To the collapse of First Republic Bank.
Sold to JP Morgan Chase overnight.
We have a problem.
And I know this may not be a surprise, and everybody is seeing it like, yep, I knew it was gonna fail. It is failing, guys, and the banking industry is quite scared. They don't know what's gonna happen in the future. They don't know if this is going to spread over and over and over to smaller banks and regional banks. And we know all the banks came together like Voltron and tried to save this bank. But even the powers of the banks, the hedge funds that all put money together to make sure that the government isn't going to take over First Republic, it just didn't work, guys. Or it's not working currently. Unless something drastic happens, First Republic is poof. They're gone. But here is the question, guys. How will this affect you getting a mortgage in the future? I promise you, the information I'm about to give you, it's quite interesting. But here's the thing, guys. Don't shoot the messenger. I'm just a messenger here. My name is Orlando. Welcome to the channel, guys. Make sure you hit that like and subscribe button. It really does help out the channel. Make sure you look in the description. I have a course for real estate investing for beginners and a YouTube course. Coupon codes in the description, guys. First Republic stuck in a standoff between U.S. bank industry. Regulators held off to see if the bank will hash out a rescue, but firms are balking at doing more after depositing billions of dollars, guys. Billions. Now, what are we talking about here? Well, like I told you guys earlier, all the banks came together and they threw billions and billions and billions of dollars. JP Morgan gave out a loan to this bank and it still did not stop the bleeding.
What?
So the banks are determined, do I throw good money after bad money? We are continuing to see the stock go down and down and down. And it's getting to a point now where depositors are running. There's a run on the bank to pulling money and billions of dollars out of the bank because they are afraid that they will not be able to get their money back, which is a legitimate fear. Now, if we take a look, guys, I want you guys to take a look at this and you tell me, what would you think if you saw your bank looking like this? We take a look at it and March 8th, it was $115 and then it fell off of a cliff, guys. Now we see that it's hovering here on the ground and then it dropped from $16 down to $6. 16 to 6, more than half, right?
Maybe I should just disappear.
Would you want to keep your money in an institution, in a bank that was falling off of a cliff like that? Or would you think to yourself,
I need to get my money out of here because I don't know what's gonna happen to this.
That's what I would do if somebody called me today and said, Orlando, should I keep my money in First Republic? I would say, are you crazy? You need to do that. You should have pulled it out 2 days before you called me. That's the truth. I would not have my money in this bank. You couldn't pay me. You couldn't pay me to keep my money in this bank. And I'm just saying that from a cautious, I'm not trying to cause a run on the bank. I mean, it's already a run on the bank. So I'm not causing anything, but I'm just saying, it's just common sense that I would not keep my money here. The government is going to take over this bank. The writing is on the wall. The red flags are there. All the warning signs are there. And you see banks are saying,
I'm not giving you guys any more money to save you.
and the government is thinking, we're gonna have to come in and save. The fate of First Republic has become a game of chicken between the US government and the lenders' largest rivals, with both sides seeking to avoid steep losses and hoping the other will handle the troubled firm. As the bank's stock keeps lurching lower, dropping 49% on Tuesday and 30% on Wednesday. Regulators have so far refrained from stepping in, but will they step in, guys? This is really the question. And my point is, I think they will step in and take over the troubled bank that we see here. God damn! But the banks are hoping that the government steps in because they have a lot of money that they have invested with First Republic. Let's be real. The banks didn't invest in First Republic to lose the money. You know that, right? Let's keep this 100% real. The banks did not loan and give First Republic billions and billions and billions of dollars because they thought they were going to lose their money. That's foolish, right? So they're hoping that the government comes in and saves them so that they could, either buy the bank and buy it for cheap and still be able to recoup their money by buying their data, by buying their customers, by buying their assets. You could go that route and get your money back. Or is the government going to allow it to burn? Are they going to allow the bank to fail and not step in at all? Well, if we just go back to a good 2 months ago, and we just think what happened with Silicon Valley, the bank stepped in.
This is rapid, how quickly this bank went into total collapse,
And remember when I said, guys, this, I wonder if the government is going to keep the same energy that they had for Silicon Bank. Are they going to jump in and save First Republic? Or did they just save Silicon Valley because it was a quote-unquote rich bank? That's my question. Keep the same energy, government. If you're going to save one, save them all, right? That's what the other banks are hoping. They're like, yeah, you saved Silicon Valley, so you have to save First Republic.
Maybe so, sir. But not today.
But does the government have money for that? Does the government have enough money to cover all the losses, cover all the deposits, cover all of everything else that's associated with First Republic? I don't know, unless they're going to get it from taxpayers. Sounds like a bailout coming to me. But let's continue on. It says they have waited to see if the bank that deposited $30 billion into First Republic last month can hash out a deal to ensure that the firm does not fail and take some of their money with it. AKA, what that means is they're hoping that all of the banks that got together can hash out a deal to buy First Republic, even though they invested tons and tons and tons of money into it. Why would a bank do that when they can just have their competition, their rival, fail and get paid all their money back? Why would you do that? Why would you purchase and throw more money into a purchase of money, even though you've already given money to the bank, when you could just watch it crumble and then the government comes in and uses taxpayer money to purchase them? And then you get paid back your money, your biggest rival is gone, you know, everything is happy. And then let me give you guys a little secret. After the bank goes ahead and gets their money back from the government and they close down the bank, they get rid of their rival, what do you think the banks are going to do? They're gonna go straight to the government and say,
We'll go ahead and buy their assets for a penny on the dollar with the money that you just gave us back.
So it's a win-win and a mega win for the banks. Executives at several big banks are balking at getting even more involved in a way that would lock in losses. Now, that makes sense. If you get involved and you put in $50 billion into this bank and now you have to throw more money into it, you're guaranteed locking in that $50 billion. It's a guarantee that you won't get it back, and it's baked into the quote-unquote purchase. It's baked into the losses. You don't want that.
It's an evil world we live in.
Some expect that if they wait, they will at least see some of those deposits back. It might feel even better than if they intervene, potentially throwing good money after bad. That is exactly what I said. I want to really hit on this, guys, because this is what the government, the US government, is very, very, very afraid of. And not only is the government, but other banks are afraid of this too. It says regulators are also probably worried that if this does not stop, who is next? That is, who comes after First Republic on the hot seat? Who is going to be the next hot potato bank that is going to feel this crushing withdrawals of deposits, failing banks? And is it going to continue to spread? Are there a bunch of community banks or regional banks that could fall victim to this? Maybe their balance sheets aren't as clean as some of the bigger banks, which I can almost guarantee that is the case. But with commercial mortgages falling and housing being the way, the demand for mortgages being down, we are starting to see income that the banks normally get is no longer there. I did a video maybe 2 weeks ago where I talked about the income that the banks are losing. They're losing almost $400 per loan. Now, that may seem small to you, but when you add that up, that is a lot of money that these guys are losing, that these banks are losing, and they cannot keep this up. You're losing money on every loan that you're doing, and you don't have the volume to back that up anymore.
This just like all has to stop.
So this is the important part that I was talking about earlier in the video is now that you know the backstory, how does this truly affect you when you're going for a mortgage? When you are deciding to get that brand new home that you're looking for you and your family? Well, it's going to be tougher. Remember months and months and months ago, I was really preaching and bringing home, and still to this day, in my videos, I say, sit on the sidelines with a purpose. Make sure you have your credit together. Make sure that you have your down deposits. Make sure you have an emergency savings account. I say all of that.
That is true.
And it was in preparation for a credit crunch, guys. And I have been knocking this home over and over and over again that you guys have to understand that when a recession hit, when a downturn happens, when a housing market goes down, then the banking industry who provides credit and debt to you to purchase those homes is going to be hit also. And when they get hit, guys, they do what's called a credit crunch. What does a credit crunch mean? It means that 6 months ago, when you got that pre-approval and you go back to that same bank and say, hey, you guys approved me for $300,000 and I had a 700 credit score and my debt to cover ratio was XYZ, that same bank will say, no, we're not giving loans anymore. Not for that. Your debt to income ratio has to be half of what you told me before. Oh, and your credit, it needs to be not 700, but it needs to be a 740. And by the way, your liquidity that you have to have in your bank account, it needs to be double what you told us previously. And that's what I'm trying to prepare you guys for. Because before, in 2008, when things were going in the direction that they were going, a lot of people saw that this was going to happen, but not a lot of people could take advantage of the situation because their credit wasn't together. They had no liquidity. They wanted to purchase homes, but they couldn't because they had no money. Their credit was messed up. Or maybe their credit was good, but it wasn't good enough. That's what I'm trying to prepare you for. When the credit crunch happens, that's where we're leaning towards. We're going in that direction. When the deals are ready to be had, and when the deals are there on the table, when you look in your city and you see your properties are down 20%, 30%. Will you be able to take advantage of those? Will you be able to go to your credit union, your community bank, Wells, JP Morgan, Chase, whoever? Will you be able to go into the bank and get the debt you have? Unless you're paying in cash. If you have cash, then this is not for you. We're talking about individuals, which are majority of individuals get debt. They get a mortgage for their home. And most people don't have $300,000 cash. That's just the truth. So you're going to have to go to a bank to get your funding. And if you're going to do that with the credit crunch happening, guys, for you to take advantage of everything that we're talking about, you have to have your stuff together. Fact. So how does this go down? It goes down. Inflation is super high. So people can't afford things that they normally could afford. The Fed raises up interest rates. People decide they can't afford homes anymore because the mortgage is too high. The monthly mortgage is through the roof. The houses are still high, unaffordable homes. So they decide not to purchase. Banks feel that and they say the demand is down. So we're losing money now. So now the banks have to make money elsewhere. They no longer are making money on mortgages. So how are they going to make money? Well, they could increase fees, but that only gets them so far. They're getting crushed by commercial defaults, commercial real estate defaults. So not only are they getting hit by residential, they're also getting hurt by commercial. Let it be two different scenarios, but the outcome is the same. Less revenue for their banks. What do the banks have to do? They will only now lend to individuals that they feel don't really need the money in a sense. They'll lend to a person who has a lot of cash, low debt to income ratio, super high credit, and they don't really need the money. You have to make sure that when we're in this credit crunch and banks start failing and falling off of a cliff, that you're ready. And I want you to be ready, but you have to see these things coming. You have to be ready for this event to happen. And when this event happens and you have all of your stuff together, I didn't mean to clap into the mic, but you get my point. You get my point. Success. Success. And that's what I want for you guys. And that's how this whole circle, I can talk about this all day, but right here is what I want you to do. Make sure you watch this next video. Because I promise you the information you get from this video, it will give you information about the housing market, get into your first rental property, financial news, give you all the information you need. I promise you the information you will get from this video, it will be gold, guys. So I will see you guys in the next one. You have a good one. Thanks.